Why was Japan unable to get inflation up to its target for the past 25 years? Japan has had a 2% inflation target for a long time, just like the US. And Japan has much more favorable demographics for inflation and elderly population who spends but doesn't produce, compared to fewer laborers, who in turn have a lot of bargaining power to affect wage growth, which in turn should cause inflation. They also have very few immigrants pushing down wages. So why has inflation been so low? And after taking interest rates to zero negative, even failed to spur inflation, why didn't they issue stimulus, either directly or via more government spending? It seems to me that causing inflation should be really easy. So I don't understand how a smart and powerful economy like Japan could fail at it, especially given their inflationary demographics. I'm not sure if this will help you at all, but there's a famous quote by Simon Kuznets: there are 4 kinds of countries in the world: developed countries, undeveloped countries, Japan and Argentina. The point is that Japan is a very, very interesting case in economics, and the actual answer to why does Japan have almost no inflation is likely superfluous because of how odd Japanese economics are. Gonna hazard a guess here. Following the collapse of the housing market in 1991, I am guessing there was 2 things that happened. 1. A systemic aversion to speculative risk-taking for the generation who lost money in 1991. 2. A generation experienced no real asset price growth and thus had to rely on wages and savings alone to increase wealth. Both factors, compounded by demographic contraction, may have seen a reduction in spending money for a generation. How exactly do you see Japan as having favorable demographics? From my understanding, an aging population like they have with essentially an inverted demographic diagram is about as bad as you can be. Consumption is driven by the young, not the old. Older people are more likely to be conservative in spending and especially in investing, and Japan is culturally more conservative than almost anywhere in the developed world anyway. Their population is literally declining. Seems like a very hard situation with which to get any economically sound goals being met. I don't have the answer to your question. Just some more data for you. The US Fed kept rates near zero for over a decade. And for most of that time did QE as well. Inflation still stayed at record low levels here too when all that happened. Like most things, inflation is not a simple phenomenon that is easy to control. If it was, we wouldn't have any problems with it. While not the whole answer, a lot can be explained by the declining population. Cultural differences can account for a lot of this. Japanese simply won't gouge on things like food, etc. The Western world has a lot of opportunists and, quite frankly, there's been a lot of taking advantage of the pandemic to gouge consumers. You don't have that in Japan, and it's simply a cultural difference. High savings, low immigration, population decline. Lack of population growth probably contributes. Whatever it is, for the most part, one have always loved living there. The prices have never been that much, if any, more expensive than a big city in the States. No tipping. So you are saving 15-20 there. Completely safe 24/7, so that is worth something. Apartments are smaller and transportation is more expensive. But I think what they have is great. No country can recover from a natural disaster as they can. Depopulation. Elderly don't consume, and Japanese healthcare system is relatively cheap. Demography is destiny. And Japan has much more favorable demographics for inflation. Exact opposite. Japan's population is extremely deflationary. Old people don't spend on new technologies, houses, etc. They spend mostly on healthcare and nursing. You grow an economy by increasing productivity with new technology. Infrastructure. You don't grow an economy by changing diapers for 80-year-olds. To be honest, if you has this to 100 different economists, you will probably get close to 100 different answers. Or at the very least, 100 different answers, answered differently. The situation with Japan sounds simple, but it's actually very complex. I would take any answers you get from a Reddit post on this topic with a huge splash of salt. I think it has been proven that printing money does not impact inflation as long as supply chains work. My thought: island nation, waterlocked, very conservative, old cultural traits that are slightly changing, but they have low birth rates, tight immigration, and some natural human disasters might hinder the demand side. Money side has been interesting. Cautious older generations were happy to pay interest on their savings rather than spend, but government has been buying up ETFs and looking to deploy capital overseas. Some good gains in the markets. China, massive land with lots of money printing but declining growth. Birth control policies that may impact labor now. Technology subservient. Political issues. Argentina basket case all round. There is no answer to this question because at the end of the day, no one has a working model on what causes inflation, how much, for how long, or how it can be mitigated. There is no causal relationship shown between interest rates and inflation, despite what the Fed and most central banks thinks. No mainstream economists can explain Japan's situation, how their economy is doing well but their stock market just goes sideways. This is because mainstream economists think that the stock market is the economy. And the existence of Japan for past 30 years disproves that assumption. Economic growth creates deflation. Japan is extremely productive. Things should be getting cheaper every year, not more expensive. Savings and polite manners. Not being able to get inflation up happens naturally as countries age. I mean, isn't it super easy? Just print shit tons of money and bum, you have your inflation, right? I don't fully understand it either. The Japanese economy seems like a complex puzzle. Hopefully an expert can explain this clearly. My 2 cents. I am nobody. Other developed countries get growth by either exploiting cheap foreign labor or inflating their property values. Japan has neither. They import stuff, sure, but they have a more local economy. Their consumer likes buying high-quality locally produced goods. My point is that if Apple in the US build and source all their stuff in the US, they will not have the growth they are seeing. But Japan outsource less. They also have very good regulations for renters and do not use the housing market as a means of investment compared to other countries. Greed without repercussions causes inflation. A lot of their elderly population consists of prolific savers, so they're really not spending all that much. They also had an elderly population that was larger than some of the generations beneath it, with lots of productive workers leaving the workforce. There just wasn't a lot of growth. With no growth, and a population that actually saves quite a bit, you won't necessarily get stagflation. I would ask for $20.01 if I were you. Japanese consumers are disciplined and non-matter how low credit is, they will never buy into the consumerism that is so prevalent in other countries. Indians are also similar when it comes to spending. There is no growth. Japan had a higher GDP 20 years ago. Older people don't spend money. Inflationary demographics? Their aggregate demand has been falling. When people get old enough to not work, they also tend to consume less. They've been printing money like nuts on the public side, but they've been paying down debt on the private side. So the money supply hasn't gone very far.